So welcome back everybody to the 5th video of the demo recording series for Nakisa Lease Administration. In today's session we will talk about terms and conditions and how to set them up underneath the lease component. So from here what we're looking at is actually a master lease agreement where we have a contract and a lease component. So if I just go ahead and click on the lease component level and go to the terms and conditions, this is where I'm actually able to set up all the different terms and conditions that I have underneath this lease. So over here, as you can see, I have base rent set up. So base rent actually represents my minimum lease payment. I have other options to include, which include standard term. So standard term is where the base rent falls under. And from here, as you can see, we have different options to choose from. So we have extensions, we have supplements, so if you have additional payments to make to your base rent, and reductions. So besides standard term, what we have is prepaid. So this will allow us to enter any prepayments that you make upfront to your lease, and this will actually be included as part of your right of use asset and not the lease liability. Besides that, we have the incentive. So for the incentive, there are actually two different types. So the first one over here, as you can see, is the free rent incentive. So free rent will allow you to select different periods that will be free of rent. So it will just reduce your base rent by for the specific period. And this will be included as part of your calculation for the PVMLP as well as the right of use asset. The other option that you have is the cash incentive. So cash incentive will reduce your right of use asset, and it's usually at the beginning of the lease. So let's take a look at other terms that are available. We have the initial direct cost. So within this one, we're able to view that there are two options. So we have initial direct costs, which will be included as part of your right of use asset and not the lease liability. And we also have the obligation to refurbish, which is a provision that we're putting for the obligation to refurbish. It's also included as part of your right of use asset, but not the lease liability. And the last term and condition that is available in the solution is a lease end. So this will actually give you the option to have two different lease end options. The first one is the purchase option. So if you decide that you're actually purchasing the asset at the end of the lease, you could select a purchase option, and you could have it, you could enter a specific value for it, or you could enter a $0 value as well. Same with the termination option. If you wanted to add in a termination option to early terminate your lease, you could do that. You could add in a dollar value or keep it at $0. Now what I'll go ahead and do is walk you through the base rent, which is already set up in here, and I'll just walk you through the different fields. So within the base rent, as you can see, we have the option to enter lease and non-lease amounts. So lease amount, of course, it's mandatory, and that's your minimum lease payment. So from here, as you can see, I put in $300, and this $300 will be included as my present value of minimum lease payment calculation. Next to it, I have the non-lease amount. So this amount is actually an expense that's added to my monthly payments or my payments that I have set up over here. And I could actually associate this expense to a specific GL account or a specific category. So if I scroll down over here, we're able to view that we're able to manage the non-lease amount distribution. We could either manage it by amount or by percent. And from here, we have different categories to choose from. So in this case, I have $50 for my truck that I'm leasing, and 100% of that $50 will go to insurance. If I wanted to split it up between insurance and maintenance, I could actually just assign 50% over here and 50% to maintenance. I could always do that by clicking on the edit icon next to each category. So if I scroll back up over here, we're able to view amount frequency and payment frequency. This will just allow you to determine how often are you making this payment and calculating the $350. So over here, I'm indicating that I'm doing it once a month, and my first payment date is March 1st of 2018. My last payment date, you'll notice that it's calculated based on the term that I enter over here. So I could enter the term in month or days. And from here, I have to enter my expected term and condition start date. So this is really my right of use asset possession date. So from here, I'm getting the asset on the same day that I start paying. Those two dates could be different. So for example, if you're making payments in arrear, your expected term and condition start date would be the 1st. However, your first payment date will be, for example, the end of the month. And the expected term and condition end date is actually also calculated based on the term that is entered over here. You have the option to enter guaranteed residual value. So this will be the maximum guaranteed residual value that you would enter right here. The estimated value will be confirmed later on once you're ready to activate your lease. And one last thing, you'll notice that we have lessor notification date available. So this will allow you to actually send a notification, whether internally or externally, to an email address to let them know that, hey, this lease is coming to an end in X number of days.